Inventory finishes July with another weekly increase. Total available inventory of homes for sale keeps climbing each week as the market tries to resume normal seasonal patterns. Most years, the end of July or the beginning of August is the peak of inventory for the year. Is this year going to be different? That's what we're keeping our eyes on this week in the Altos Research Market Report. Each week, Altos tracks every home for sale in the country, all the pricing, all the changes in pricing, all the supply and demand, and presents that data here so you can see it before it becomes available in the traditional headlines and data sources. It's Tuesday, August 3rd, 2021. Here's the data for the week. The question on everyone's mind is, will inventory keep climbing? If supply builds, does that have negative consequences for pricing, for home prices later in the year or for 2022? Well, total inventory of available unsold single-family homes in the US did indeed climb another 1.1% this week. We're up to 407,000 homes on the market, up 1.1% from last week, up 33% from the April 30th lows. But we still only have on the market right now as many as were on New Year's week in January. So weekly growth decelerated a little bit from last week when it jumped 3%, and is still climbing steadily each week. So it appears we have a few more weeks to go before inventory peaks. As I said, the low point of this year was April 30th. Normally, the fewest homes on the market is January, and inventory starts climbing in March. This year, because of that insatiable pandemic demand, inventory kept falling all the way through April 30th. And here's another way to look at the same data and how we can project where inventory will peak for 2021. This last week of July is normally the peak of available inventory. After August, we start having fewer new listings come to market, and those that are on the market at that point keep selling. So the total of available inventory keeps shrinking into the fall. This transition takes a little time. There's a curve, the top of the curve that forms. And so if, for example, we see just like 0.5% of growth this week, then topping out mid-August would be expected. If it keeps shooting up, then our top is going to be later in the summer. The dotted part of the line here shows how that normal cycle would play out for the rest of 2021. In this normal scenario, we'd end the year with only 250,000 single-family homes on the market, which would be way fewer than this year because the frenzy continued so late into the buying season. As I try to point out, there are two scenarios where 2021 ends with higher inventory or somewhat higher inventory. First is if interest rates rise, but they've been falling for 4 months. So we're back down to 2.8%. Hard to see that happening. The second is if there is some final set of homes in the mortgage forbearance process that are forced to sell. Note that if you're still holding on to the hypothesis, the assumption that there's going to be a flood of homes to hit the market as distressed homeowners are forced to sell, the flood isn't coming. Americans are so strongly positioned with their mortgages and equity. There might be 10,000 or 20,000 additional homes that get sold, which that would add a couple percent of listings later in August, but it is not enough to move the needle on prices. You can see how far below, we're still below the normal level, that an additional, say, 10,000 homes would just tilt the curve up just a little bit, but nothing close to getting back to normal. By the way, we have our August webinar coming up next week, August 11th, Wednesday at 10 a.m. Pacific. This is where we're going to look into all the variables to understand whether we're really at the end of the pandemic housing boom or whether we can now see it extending into 2022. There is a link to register for the webinar in the description below. Anyone can join. If you're a realtor or a broker, please invite your colleagues and friends, because this is such a critical time to make sure that our home buyers and sellers are properly informed, that people have all kinds of questions. They have all kinds of their own opinions and assumptions. So there's a link to register for the August webinar in the description below in the video. Click on that so you can join us next week, and we'll dive deep into the data. Okay, here's the other side of the equation, the demand side. This is our measure of immediate sales. Of the 103,000 homes that came to market this week, over 22,000 of them sold essentially immediately. That's like 22% of the listings. The new listings sold within hours or just a couple days. This phenomenon has been happening all year, of course. And it's hard to tell when it'll let up. Maybe the data is showing that demand is waning just a touch. Earlier in this year, that was even more of them were selling immediately. Frankly, though, I expected this number to be trending lower by now, and it's really not. Perhaps in the next few weeks of August, we'll see buyers maybe distracted by school and, fingers crossed, a return to office. The key here is that this insatiable demand shows us that if we get, for example, an extra 10,000 homes hit the market from the forbearance process, they're only going to get gobbled up as soon as they hit the market. You see this demand pattern played out in market time too. So normally this time of year, you can start to see market time starting to stretch as there are fewer buyers and the homes on the market are sitting around a little bit longer. Median days on market right now is still only 28, still really a record pace and unchanged from last week. There's a little more inventory and a little lighter demand. We should expect days on market to climb into the end of the year. Which brings us to prices. The median price of a single family home in the US inched down this week to $395,000. That's down from $398,900 last week. This change is totally normal for this time of year. And as I say, normal is good. Normal means there's no fear of some kind of housing bubble forming. Asking prices as of this week are up 12% year over year. It's down from the peak of the frenzy and going to finish the year very strong. The median price of the new listings, that's the lighter color on this chart, is also ticked down this week to $359,000. New listings prices, remember, lead the active market. And because these prices are holding up later into the summer than usual, that's the indicator that sales prices will remain high for several more months. House gets listed today, it gets an offer later in August or in September, it closes in September or October. That's where this lighter line here shows where the price changes are already built into the market for sales later on. And we're much stronger than normally we would be starting August. Okay, that's all the data we have for this week. Inventory is still climbing as some sellers are testing the market later in the year than maybe normal. No sign yet of any distressed inventory from the forbearance process. In the next few weeks, we should see peak inventory and then a normal decline through the end of the year. Across the whole country, if you are selling a house, it's a really, really good time for you. And the question is that window of perfect market conditions closing? So that's the topic of next week's webinar. Click on the link in the description below so that you don't miss out that full hour of market details. Until then, for those of you who need the data for your local market, just go to altosresearch.com and run a report. Agents and brokers, make sure you request a demo so that you could get some time with someone from Altos to show you how to use the data in your business with your clients and your prospects to keep them best informed. Okay, that's all for this week. Thank you. or next week.